welcome everybody to our class today. Today we are going to discuss cryptocurrency and kind of give a crash course of this brand new and emerging asset class that we do get a lot of questions about on a daily basis. My name is Jason Shepard. I'm an IRA specialist. We have Vince. Vince, I'm going to let you introduce yourself because I can't pronounce your last name. So I'll let you take it from there.
Yeah, we'll start with that. So my name is Vince Antonorsi. I'm our director of operations here at NuView. I've been with the company for about 3 years. And yeah, crypto's probably been one of the hot topics now for a few years now. So hopefully we get to go over some questions today and provide some light.
Perfect. Thanks, Vince. So we do have a slightly different format for today's class. We are going to break this up into a little bit. First, I'm going to talk a little bit about what it is and go into a little bit of where we, not just where we are currently, but where it came from, where we are now. And then we'll do a little Q&A, both some questions that our brokerage team gets frequently and have Vince kind of field those questions. And then we'll open it up to questions out there. One of the things too, as we always discuss on the disclaimer, NuView serves as a custodian for alternative investments. We do not provide tax or investment or legal advice when it comes to these types of investments. It's very important to discuss these types of transactions with a financial advisor, a financial planner, if this is something you would like a little bit more information on, as well as tax implications from those necessary entities. Also, with cryptocurrency being a relatively new and emerging asset class, the guidelines are changing almost by the day or week when it comes to that. The IRS does not have a whole lot of guidelines out there with cryptocurrency, so it is important to make sure you are staying up to date with those regulations and keeping an eye on the IRS as they issue new guidelines from there. So first, we'll talk about self-directed retirement plans. Basically, what is a self-directed retirement plan? It's a retirement plan that allows you to take the funds out of your standard investment vehicles and gives you the power back to invest them as you see fit into many different asset classes. We've had classes on real estate, and several of our clients are invested in real estate, but there's no shortage. Your imagination kind of controls what you can invest in and different types of accounts. As far as benefits of self-directed IRAs is diversification, and it's not just diversification within certain segments of the stock market, but it's investing in loans, it's investing in mortgages, it's investing in real estate. I like to say, especially with real estate, it's everything from mineral rights to multifamily condos. There's no shortage of ways that you can diversify your asset classes. Tax savings, obviously, with IRAs, any growth is tax-free, so you're not subject to capital gains tax. And then there's additional tax savings if you go the Roth account route. And then lastly is invest in what you know best. Obviously, cryptocurrency is brand new, but if you know real estate, you know farms, you know mineral rights, you know those sorts of things, it gives you the freedom to invest in areas that you are familiar with. So without further ado, we'll kind of jump right in. Wanted to kind of show you first and foremost how new this is. So the birth of cryptocurrency and the first Bitcoin was mined back in 2009. So if you think about it in the nature of asset classes, it's very, very new when it comes to that. And we'll get into mining of Bitcoin later. We can answer that. But it's exactly that. It's digitally mined through the internet. And I know we've had other classes, especially in our podcast series in regards to Bitcoin mining and how there's different setups for that. 2010, the first commercial transaction using Bitcoin actually took place. Somebody bought 2 pizzas for 10,000 Bitcoin. So you think of that at the time, that's what 10,000 Bitcoin. Did a little math right now. That'd be $270 million for 2 pizzas using the current valuation of Bitcoin being at about 27,000 per coin. So
That's a pretty good pizza.
that must be very good pizza. No, it goes to show you that's how much the price of Bitcoin or per Bitcoin has changed. 2011, we started seeing the emergence of other cryptocurrencies such as Litecoin, and we'll touch on a few of the other coins that are available for you. 2012, additional major platforms began offering crypto to retail investors, and then shortly after that, began to be held within IRA accounts. 2015 through 2020, you started seeing a lot more widespread adoption and acceptance. Companies like Tesla, you could even buy a car with cryptocurrencies. There for a while, they were taking Bitcoin, and then they said they weren't taking Bitcoin. You have to use a special coin in order to buy your Teslas and things like that. So widespread adoption over the past 2 to 3 years. And then Bitcoin did reach its highest all time at $60,000 per coin, which really makes that number there stand out. Where those 10,000 pizzas at 60,000, that would have been a very, very expensive pizza from there. So just goes to show you, obviously, a lot has changed over the past 12 years. When it comes to that, it's a fast moving industry without a whole lot of regulations. So with something moving that fast, why would people like it? One of the biggest draws to it is that it's decentralized. Nobody controls, no government entity, no company controls Bitcoin or the Bitcoin network. It's all handled through what's called the blockchain, which is a high level concept with that. But everything's decentralized. Nobody actually owns the Bitcoin network. The transactions cannot be altered or censored. So it's a very, very decentralized form of currency. Also with that, and I'll kind of skip ahead, it's a fixed supply. So nobody controls the supply. We were talking earlier about whether or not it was monopoly money and people can just print their money. There is a fixed supply of Bitcoin specifically. Other coins have different caps and don't have a fixed supply, but Bitcoin itself, that is one of the things that's caused that one to draw and grow that much faster, because it is a fixed supply. There's only so many of those coins. They have to be mined through a mining operation in order to have new one, and then they're traded at that point. Currently, only 21 coins have ever been created. So it's a much far more limited supply of coins than some of the other ones like Doge and some of the other coins that are out there. Peer-to-peer transaction just gives you the ability. It's much more like cash in that way, but it's a way to send a cash transaction across the country, across the world. It's a secure method by using that blockchain technology we just talked about. It gives you that secure way. We were talking about cryptography. That's where that cryptography, which kind of goes back to obviously the secured methods of sending communications back all the way in World War II. That was all called cryptography as well. So it's a way to secure those payments and the transactions to make sure they are not hacked. There's no ways to get into them. Low fees, obviously, that's the most important factor for some people. Typically, it's much cheaper to move money through Bitcoin and their peer-to-peer network, and they're fast. You don't have to wait for checks to clear or processes to post. It's a much quicker transaction. And then there's a global digital ledger, so that way it's easy. We talked earlier how it's difficult to track, but it's also more simplified to track because it's not going from this bank to that bank to that bank. It's all on one system, and just gives that centralized blockchain ledger that we talked about. It gives everybody the ability to verify the coins and everything.
But that's only for Bitcoin. some of the other ones can be doing whatever they do, and they're not necessarily tracked in the same way.
Correct. Absolutely. Good question on that one. So that's kind of where we are and, where we've been and where we are now. But we're gonna kind of take some of this opportunity right here to have Vince come in and talk through some of the most commonly asked questions that we get and his team get on the crypto front. So Vince, if you don't mind, first one, is investing in crypto safe?
All right, kicking it off with a heater.
Yeah.
I guess first thing I'll say is I'm by no means a crypto expert. My main focus is understanding how crypto works through the retirement industry and how clients can invest in it and if it's allowed to be invested in. With that first question, so is investing in crypto safe? That really depends on what you consider safe in this scenario. When we're talking about risk, every investment has its risk. Cryptocurrencies tend to be on the higher side, but as most people know, with higher risk, it tends to be a higher possibility of reward. But when we consider it on the risk side, Jason was just talking about how the price of Bitcoin itself has changed so much over the past 10 years. I guess that's one of the fun facts that clients always want to know. If you would have put about $1,000 in crypto when IRAs started getting involved in it, which is about 2014, 2015, you would have about $250,000 right now, just off of $1,000. However, if you would have bought in 2021 at its all-time peak, same thing, $1,000, you'd have about $500 right now. So, like I said, high risk, high reward. So when we're talking about safe in that aspect, you can expect volatility at least when it comes to cryptocurrency. If we're speaking more in the terms of is it safe, is my investment safe from let's say malicious individuals? When it comes to that question, it really depends on how you invest in crypto and how do you hold it. And like I said, I'm by no means an expert in what that means, but traditionally most people now invest in crypto through an established exchange, similar to brokers nowadays. So you'll see names like Coinbase, Gemini, eToro. That's going to be the most common way of investing in crypto. And when we talk about safe on that area, it really comes down to how safe is their platform from being hacked or what have you. There's also other methods to hold crypto, such as on a wallet. You can even have it completely off the grid. And as to how safe that is, I'm not going to get too much into details. It can be safer, but a lot of it is required for you to access with special codes and special passwords. And I would consider that less safe for me, at least, because I can barely remember the password for my computer, let alone a digital wallet. So do with that what have you, but is crypto safe? I guess it depends on how you're investing in crypto.
Are the fees real high for making transactions?
So that's a great question. Fees is probably the hottest topic when it comes to choosing, your preferred platform. They tend to range around that 1% mark. So a lot of them charge based on actual trades performed, and they'll charge you a 1% fee. That's kind of I would say that's an industry average. But you'll see fees as low as 0.2%, fees as high as 2.5. It really just depends on your preferred platform, how bulked up their system is, how simple it is. And we'll go over some examples later today. That's just specific fees, but majority of these operate on a transactional fee basis.
Perfect. Next question that we get most commonly is, do I pay taxes on cryptocurrency? Obviously, we know the advantages and the tax advantages of investing in your IRA, but kind of tell me what your thoughts are on that side of it.
Yeah, no, this is a great question. And if we're speaking generically about cryptocurrency, let's say I just went outside and opened an account right through my phone, no IRA required, you will pay taxes on any gains you make. So one of the only, Jason spoke about it a little bit earlier, but the IRS has been a little slow to catch up with how quickly crypto is moving, right? So they haven't set out a whole lot of regulation, at least not a whole lot of concrete regulation when it comes to cryptocurrency. But one of the very basic things that they've said is that crypto is considered property. So when speaking about property, you pay taxes on your capital gains, meaning if I buy it at 1,000 and sell it at 2,000, I'm supposed to pay taxes on that $1,000
But
gain.
if you're holding it in your IRA, it's not taxable, right?
It almost seems like I pitched you that question. If you do invest in crypto through IRA, similar to any other property, you don't pay any sort of capital gains because it's all held within a tax protected account. So whether it's a traditional and your taxes are deferred until you begin distributing, or it's a Roth IRA where it's essentially tax free or post tax money, you save a lot on that taxation side. So like I said, speaking generically, yeah, you would pay taxes on the personal side on whatever your capital gains. You would also incur a tax credit on whatever capital loss. On the IRA side, you really get to see that benefit of not being taxed on any sort of gains or losses, only, like I said, at the time of distribution from the account. Perfect. Great question.
Absolutely. So how do I invest in crypto with my Solidarity IRA?
Yeah, and this is probably a number one question that we get every day. So we, like Jason said, we have our brokerage and crypto team that navigates these questions with our clients and educates them on how we can do this. If you remember that timeline, 2014, 2015, that's when IRAs really started getting involved with cryptocurrency. I would say we probably started seeing our first accounts with crypto in them around the same time. And it was all handled back then through check with control LLC. So you would need to set up an LLC, create some sort of crypto exchange account to purchase the cryptocurrency, then figure out the storage and things like that. Obviously, with the years, we've really put in the work to expand our platform and make it more accessible, easier for a client to actually invest in cryptocurrencies. So now, not only do you have the LLC route, but you can also just work with a custodian that has incorporated crypto into their platform, like Nuvio.
Absolutely. So kind of leading to that next question, what does investing in crypto with an SDIRA look like at Nuvio?
Great question. When I think of Nuvio, one of the things we really focus on is just making sure that clients have all the tools needed when it comes to their self-directed investments. On the alternative side, we really specialize in everything outside of the stock market, and that includes cryptocurrency. So one of the things we've done over the past few years is really think about, okay, how do we make that process and that offering easier for clients to access? Cboe Digital was probably our first crypto relationship that we established about 3 years ago. We decided not to reinvent the wheel. We did not want to become the next crypto exchange. There's already people out there that specialize that. And we figured out that it's a much better approach and a much more of a benefit to clients in partnering up. So Cboe Digital, which was formerly ErisX, was our first crypto relationship. They're a cryptocurrency exchange. The reason we chose them first is when they came about, they had a heavy focus on regulation and tax protected accounts. So it was naturally a good fit for us. One of the first things we wanted to keep in mind was compliance when it came to cryptocurrency investing. I worked with them for about 6 months before we actually released the platform, and it's been a great relationship ever since. We have a few hundred accounts that trade crypto through them, and it's all held within their IRAs here at Nuvio, which again goes right back into that tax protection. They offer what I consider the four main cryptocurrencies. So of course you've got Bitcoin at the start, but then Bitcoin Cash, Ethereum, and Litecoin. When you think about mainstream cryptocurrencies, these are going to be your I would say your top four or your household names. Now, as we progress, though, like I said, our intent is to keep expanding our platform and just providing more tools for clients to invest in crypto. We've been really excited to announce this past month or two that we've officially kicked off a relationship with Gemini Exchange. Now, Gemini might be a more recognizable name for those that have taken a look at crypto or maybe just know a few things about it. They're considered by far one of the top cryptocurrency platforms in the world. They usually get ranked in either the top 3, top 5 crypto exchanges around the world. And as you'll see from some of the titles right here, they're considered either the best for beginners or second best overall. The reason this was a natural relationship for us as well is they place a high amount of value on security, which is a big thing for us. I'm sure we've all at least read a headline about a crypto scare or crypto scam and things of that nature. We've been really building this relationship over the past year to ensure that all accounts created at Gemini through NewView are both completely protected from outside forces and also protected from yourself. If you've done any sort of due diligence on your IRAs before, you know that there's such thing as prohibited transactions and things that you're not allowed to do. We've taken the time to make sure that's not even possible through the Gemini relationship. So the accounts are built, again, within your NewView IRA. They're available in all 50 states, which is not common around crypto exchanges, just due to each state having different regulations about who and when you can invest in crypto. It's very cost friendly, and it really what attracts clients is their offering list. So I spoke a little bit earlier. Cboe Digital offers the big four. Gemini continues to add coins, I would say every month or so. And their list right now is over 80 coins long.
Perfect. Yeah, and then also if you'd like to learn more about those, and in the chat, I believe document 1 has the fee schedule for Gemini, and document 2 has a list of the cryptos that are supported through the Gemini exchange. So all of those links are in the chat below if you guys would like to look at those as we proceed. So Vince, I appreciate you taking the time. I do want to touch on there are a few other common questions that we get.
Sure.
First is that, so now that we have the exchanges, we have everything already set up. How do we secure them? How do we securely store the crypto at this point? Does Gemini store it? Do we store it? Is it done through those wallets? Like, how do we do that from here?
Yeah, that's a great question. And this is now for when we receive calls from clients that maybe have heard about crypto or done a decent amount of reading. This is always a question that comes to mind is, okay, how do I store it? How do I secure it? If we're talking about working through an exchange itself, such as Cboe Digital or Gemini, the storage will all happen over at Gemini or over at Cboe Digital. They hold their crypto in segregated wallets, and we have no involvement when it comes to their storage and security. That's why it's important to do your due diligence when choosing the exchange of your choice, of course, and making sure you're aligning your relationships with your values. Like I said, we picked both of those partners mainly based on their security and compliance, and we've yet to have any issues yet. Now, if we're going the LLC side, that's fully up to you. Like I said, a lot of people try to do that through their own wallets and or even off grid. And when it comes to securing those, that might be a better question to ask on the web.
Perfect. Well, I appreciate that, Vince. As far as what to do next, can you walk through kind of? So I've wanted to set it up. I'm ready to set up my Gemini account or Cboe. What are those steps in order to do that? Obviously, speak with my team to get the account open, get everything moved over, whether that's through a transfer or rollover. But then when it comes to those next steps, do they call your team? Do they go online? How does that work?
You can certainly call our brokerage and crypto team if you have any questions. Although if you are ready to open up that crypto account, it's as easy as completing our crypto form. It's a one-page document, and really all it's going to ask is which platform you'd like to choose and how much you'd like to move into the account. Once that happens, we've tried to make this process as streamlined as possible, understanding that a lot of crypto has to do with timing or time-sensitive investing. So as soon as you complete that document and send it to our brokerage team, which you can always send at crypto@newviewtrust.com, that usually from the time you submit that form to the account actually being open is no more than 48 to 72 hours. And at that point, your account will be ready and open. You usually get an email right from the exchange letting you know how to navigate their platform, and you can start placing trades right away.
Perfect. Let's pause there. Amy, do we have any questions from the chat? That we can kind of pause there before we start talking about next classes and everything from there, so.
We do have a couple from the chat. The first one is, are there any upcoming developments or trends that we should keep an eye on in the cryptocurrency space?
It's a great question.
Absolutely.
When it comes to any upcoming developments, of course, crypto has been under the magnifying glass now for the last few years, with regulators really, cracking down on it. Like I said a little earlier, the IRS has been a bit slow to provide guidance or concrete guidance when it comes to cryptocurrencies, but it is a topic of discussion across the country and the world. So when it comes to upcoming updates or important features, I would just stay tuned and make sure you subscribe to a few of the blogs from the major exchanges. They tend to have great information about what's upcoming.
Great. The next question is, what are some factors that influence the price of cryptocurrencies, and how can investors manage this volatility?
That's a great question.
Absolutely.
Like I said, I'm no investment professional, nor am I an advisor, but I can go over a few of the strategies I know our clients partake in. So of course, with the volatility, we see a lot of clients, especially with smaller value accounts, doing some swing trading, what's called swing trading. So trying to just time those trades to get a large capital gain on it. Crypto tends to fluctuate heavily. In a much more frequent manner than let's say stocks. So for those clients that might have ESAs or HSAs with smaller contribution limits, smaller value, this is for those that have a higher tolerance for risk, they like to go the crypto route because the potential for gains are very high. On the other side of the spectrum, we have clients that enact the long hold, which is simply, believing in that crypto will continue to rise in the future. Like I said, if you would have purchased crypto in 2015, 2016 and just held it all the way, even with the highs and bumps, you would have seen a significant gain today. So I would say we see both sides of the spectrum. And when it comes to what affects price, I think it'd be too many to count in this train.
Absolutely. No, I notice a bump and a tick up every time they're about to announce the interest rate hikes, and then you see it kind of fluctuate from there. But other than that, it's really staying on top, like you said, monitoring the blogs and having those types of alerts, news alerts, and things like that that'll help you stay ahead of it. Obviously we can't keep you up to date, but obviously there are a lot of opportunities out there, whether it's through Yahoo investments, Yahoo Finance, Google alerts, anything like that, anything you can do to keep yourself in the loop and what those additional stories can help you stay ahead. Just like with any financial transaction, the more informed you are, the better you're going to be able to try and spot those types of things. So great question. Amy, did we have any others on the chat, or?
We have one last one. What are some of the most popular cryptocurrencies today, and what sets them apart from another in terms of technology or use cases?
It's a great question. We're getting a little more and more technical as we go through.
Absolutely.
That's all right. I'll give, I guess, my 2 cents as to my understanding of different cryptocurrencies. When we talk about Bitcoin, it was really created as what it's called, a currency. It was created with the intention of being used as a monetary form of transaction. To date, has it been used that way? Not really. The IRS calls it property, and most people use it as a method of investment. However, as the crypto world tends to evolve, different cryptocurrencies come out with different approaches, different algorithms, different blockchain technologies, and they're all tweaked in a sense. If I can give a comparison between Bitcoin and Ethereum, which is likely the second largest one, Ethereum was created more to be a contract-based cryptocurrency. So a lot of these other cryptocurrencies that you see pop up are built off of the Ethereum model. And I mean, I've seen it, I see it now coming into things like real estate and precious metals, where they're starting to tokenize real world investments. So we might see a world someday where instead of buying a property through a contract and a deed, you might just buy someone's token for it and claim ownership. So those are all things that have been put on the table. Have any of them been enacted? Not that I've seen, especially in the U.S. Some emerging countries are trying to adopt this at a bit of a faster pace, but I think it's still too early to tell.
I've even seen where some investments are, instead of selling shares, they sell those tokens. So it's essentially buying shares of a real estate deal or shares of that. But instead you're buying a token like a cryptocurrency.
Right.
So obviously that has its own pitfalls and what that could potentially look as far as prohibited transactions, and is that considered, we didn't even get into like NFTs and some of the other terms you hear in the cryptocurrency adjacent network. But obviously that's where those are kind of heading in that direction. And as that continues to grow, obviously Uncle Sam will say, you know, what is and isn't allowed and what additional penalties are. Right now, we're still in that very early phase on that. So, well, if we don't have anything else on the chat, I know we've had some questions here in the office during the presentation. So, has anything else come up in the classroom? Just one more.
Yeah. Do you actually, if you invest in this, do you actually get a coin?
No, it's all digital.
It's all
digital
computers.
currency. Correct.
Absolutely. So
Great question.
that's absolutely, I appreciate that. So if we don't have anything else, Amy, we are going to move on. Appreciate your time, Vince, and appreciate everyone online and in here in the classroom. Do want to go ahead and let you know next week at this same time, Cora Matzik, our business development manager here, will be discussing private lending and how to do that within an IRA. This right here, this QR code, you can use that to register for that class as you see fit. In addition, oh, you lost me there. There we go. All About Alts. That is our podcast. We did episode 23 last week, Fundamentals of Fund Structures. That was a great episode. Also, that goes live every Wednesday morning if you're not already registered to receive our alerts on the podcast. That'll be on the next page right there. Amy, you gotta help me out. It's not moving forward. You can stay up to date with all of our alerts right there, whether that's through any of the social media platforms. You can get alerts on the podcast, any live events, anything like that will be there. If you scan that QR code, you can get access to those right there. And last but not least, we always want to mention our philanthropy, Share the Love, where we, this was founded by our CEO and founder, as well as our president, to provide wheelchairs to those that need it in other countries. So to learn more about that charitable foundation, you can scan that QR code or go to their web address, which is linked there as well. So, Vince, I appreciate you taking the time out of your busy day, and everyone online and here in the class. We look forward